Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
There's a lot of variance in price point in these small towns where you'll see a fourplex in one very small town sell for $800,000, and then you'll see a fourplex in another really small town 20 minutes away that's listed for $475, right? So I think in these smaller markets, there's a lot of opportunity. I think about Port Colborne, Ontario. When I bought there, I bought a fourplex there for $275,000. Then like a year and a half ago, I bought a fourplex there off market for $240,000 as well. So I didn't feel good walking through those properties. I still don't feel good driving in the neighborhoods, but the numbers have been like astronomical on what it's been to renovate them, turn them around. And if you look at, what the government pays people per month and things like that, like $1,000 a month rent is pretty much like attainable for anybody, it seems like, across the board. So if you're getting things under 500,000, you're getting 4,000 plus in rental income. Those are good places to go if you're willing to go. But then if you get to a place like I am, I'm more about systems. I don't need the biggest cash flow. I have like a mortgage business. I have like a lifestyle, all that kind of stuff. It's really just, where is it going to be easier, where have people in place, all that kind of stuff. And I can just rip through more transactions kind of thing. And I think about other things. Like when I invest now, I think about, where is a good neighborhood maybe my kids or somebody in my family might want to live in the future? And with the real estate prices, that's something I think about too, because you might be passing this down not for wealth, but for just an actual roof over someone's head in your family kind of thing.
Yeah, I mean, that's why, like sometimes just even single family properties are going to be huge. A, they're a lot easier to sell because you've got, a wider pool of people that are interested. But B, having a detached, I think in the very long run, as prices continue to go up from a long-term standpoint, it's going to be harder and harder to afford those. So you bring some great points. What do you think? I mean, obviously right now the rates are, I'm sure you get this question a lot, but the rates are at an all-time low. And at some point they're talking about raising them. We've got some inflation, obviously, probably a lot more than we've ever experienced. Everything is costing a lot of money. They are talking about, the government talking about raising the rates at some point to slow some of that stuff down. What insights can you share for somebody listening to this, on what your thoughts are?
Yeah, so a lot of media speculation. So I think when it comes to the media, I wish we can trust them and, hang on every word. But unfortunately, a lot of times we see, a lot of manipulation and things like that, right? So if you look at what's been happening, there's been a lot of attention, a lot of hype on interest rate increases. And, a lot of these different banks have had their top economists give projections and things like that. And of course, there was one economist from Scotiabank who predicted, 8 variable rate increases. And of course, the most aggressive prediction of all these different predictions is the one that, every media outlet is running with, obviously, right? So you have all these banks who have essentially adjusted their fixed rates upwards, right? Now we're seeing almost like a full % difference between fixed rates and variable. And then there's all these media outlets saying, hey, you should take the fixed rate now. So they're asking people to voluntarily increase their interest rate by 1%. Well, that sounds like a really profitable opportunity for one side of the party, right? Now, there's another way to look at it, which is just, what does this actually mean? So if you look historically in Canada, in the last decade, there's only been about 11 variable rate changes at all. Now, that doesn't mean they're increases. Some of them have been downward trends, right? So on average, it averages in the last decade about 1 rate change per year. And at most, you'll see those increase by about 0.25. So if you just kind of like break that down for the average person, a variable rate increase equates to about a $13 increase for every 100,000 you have in mortgage. So if you're the average person and you have a $500,000 mortgage, that's about, every variable rate increase is about a $65 increase in your mortgage payment. So let's say, we did see something unprecedented. We saw 5 variable rate increases in a short period of time. That's a mortgage payment for the average person going up $325 a month.
Based on 500 grand.
Based on 500 grand. And that's, if we had 5 increases. So I guess my view on that is like, yeah, a lot of people live tight. A lot of people live paycheck to paycheck. Do I think anyone's losing their house over that? I really don't. I think that maybe you're not going out for dinner twice a month as a result of that. Maybe you're getting a less expensive car. Maybe you're foregoing one recreational sporting activity. Like there's a lot of different things that you can do to make up $325 per month. So at this point, am I overly concerned about it? No. What I would, caution people is just be careful about going into these fixed rate products that come with these nasty, expensive penalties, right? Because the worst thing is you want to break your mortgage to access equity. Okay, you may have a $30,000 penalty, right? We've seen clients with $40,000 penalties, things like that to break these mortgages. The penalty cost is a huge cost, but in addition, it's the opportunity cost that you'll lose by actually not taking action. You'll say, no, what? I don't want to pay a $35,000 penalty, so I'm going to forego this venture that's going to potentially bring me a lot more money in the future, right? So there's two different burns associated with that. So I'd say, am I overly concerned about the interest rates? I'm really not. I do have concerns about Canadian real estate like everybody else, but the interest rates are definitely not a source of that concern.
Okay. All right. No, that's good. I mean, it's because I get that question a lot too. Like from a birth perspective, I mean, it makes no sense to go fixed because you're going to refinance, you're going to break it. You don't want to pay fees. So, variable is what I have with, I think most of my properties, except for maybe my primary, because Matt actually covers that part. But everything else, I like the flexibility of being able to do what I want with them. And, if you want to refi or for whatever reason you want to sell, like you're not paying a fortune on breaking these fees. But I do agree with you. Like that's something that they want people to pay that extra percent because they are going to make money and banks are in the business to make money and be profitable. What other things are you hearing that might be coming and happening and changes potentially coming to the financing industry?
Nothing like we're not seeing a lot of, I mean, there's some stuff that, that may be coming that's like off the record that I can't say, right? But, there are some things where I think one thing that you can expect is you can probably expect more banks to join the broker channel. So right now, if you're a mortgage agent, we have access to, TD Bank, Scotiabank, Meridian Credit Union, a whole host of lenders, about 50 lenders that, they don't have retail banking operations. So most people have not heard of these banks, but, there's some other ones like RBCs, BMOs, CIBCs that don't operate in the broker channel. So I think what you can expect is more banks joining the broker channel because they're seeing that the appetite of Canadians, you're seeing a huge change towards fixed rate or variable rates. People are having now a bigger appetite for variable rates. Also, people are having a bigger appetite for going through a mortgage agent versus directly in their banking institution. And as a result, more banks are probably going to come through on the broker channel. I think that's one thing we're definitely going to see in the near future. And then the other thing that we're seeing more of is there's a huge appetite for commercial lending on residential, what is traditionally viewed as residential properties. So we're saying fourplexes, triplexes, things like as people continue to build these portfolios like 7, 8, 9, 10 properties, I think we're going to see more niche credit unions come to the market with good lending products. So we're seeing some of them come out, but they're very location specific. They'll say, hey, we'll finance your duplex, triplex, fourplexes commercially based on your strong cash flows, but we'll only do it in Hamilton, London, Windsor. We won't do it in North Bay, Sudbury, places like that. So I think you're going to see a lot more credit unions coming to the table with commercial lending products just to support this growing pool of investors because there's, it's growing like crazy every single year, I'm sure, as you know.
Yeah. Okay. So there's two questions because I want to talk about what you just mentioned with the increase in investors. But before we get into that, is there a reason? Because I find, many mortgage brokers out there, they go to, like obviously the A lenders first, and they go to like, the B lenders, Equitable Bank and whatnot. Do you think it's important for somebody, an investor, to go to the credit union themselves to establish the relationship, or is it better for a mortgage broker to do that? And, why or why not?
So it's a good question. What you'll learn in banking, specifically in commercial banking, and even not even just commercial banking, like literally all types of banking, is it's not about it. Like it's about the institution, but it's also about who you talk to at that institution. So I can go to BMO and speak to one person in commercial banking, and I can go to BMO and speak to a different person in commercial banking, and they both have different experience levels. They're both going to give me different answers. And know what? They both have different leniency with their underwriting department. So somebody who's a newer commercial agent at BMO might not be allowed the same flexibility to make executive decisions that a more experienced commercial banking manager may have, right? So it's about the people, right? They talk about real estate, it's about the money, the people, and the deal. In lending, it's about the people too. It's like, who is actually the right contact? Because, I can name drop a credit union I work a lot with right now called Libro Credit Union. And I've tried to work with them in the past, but it wasn't until I had the right person there supporting us where we're able to get all these deals approved and these deals pushed through. So hopefully, your mortgage broker has done that grunt work where they have the contacts in the institution, so you don't have to be the one to go through it. But I would say that's really the most important thing is.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?